Welcome to a deep dive into the world of high-yield dividend stocks that have never cut their dividends. In the vast ocean of the stock market, dividend stocks are like the steady and reliable ships that investors often rely on. But what exactly are these? Simply put, dividend stocks are shares in a company that return a portion of its profits to its shareholders. These payouts, known as dividends, can be a major source of income for an investor, especially when the market is volatile. Now, let's focus on high-yield dividend stocks. These are stocks that provide a higher-than-average dividend payout. It's like having a ship that not only sails steady but also moves at a faster pace. The higher the dividend yield, the more income you receive for every dollar you invest. This can be a fantastic way to grow your wealth over time. But here's the thing. Not all high-yield dividend stocks are created equal. Some companies, due to financial difficulties or other reasons, may cut their dividends. This can be a significant blow to investors who depend on these payouts for their income. That's why we're focusing on a special category of high-yield dividend stocks today, those that have never cut their dividends. These are companies that have shown consistent financial strength and commitment to their shareholders. They are the steadfast captains of our metaphorical ships, navigating through economic storms without compromising the rewards for their investors. Having such stocks in your portfolio can provide a sense of security and predictability. It's like knowing your ship will always reach its destination no matter the weather. And in the world of investing, having that kind of confidence can make all the difference. Stay tuned as we explore 5 such companies that have consistently rewarded their shareholders. These are Pfizer, Altria Group, British American Tobacco, AT&T, and Philip Morris. Each one of these has a unique story to tell, a testament to their resilience and commitment to their investors. So buckle up and prepare for an enlightening journey through the world of high-yield dividend stocks that have never cut their dividends. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First up, we have Pfizer, a titan in the pharmaceutical industry. When it comes to stability and consistency in the world of high-yield dividend stocks, Pfizer has certainly made its mark. This pharmaceutical giant, known for its extensive portfolio of health and wellness products, has managed to maintain a strong dividend payout record over the years. Let's delve into Pfizer's dividend history. The company has been a member of the elite group of dividend aristocrats, a status reserved for companies that have consistently increased their dividends for at least 25 consecutive years. Pfizer is no exception, demonstrating its commitment to return capital to shareholders through regular and increasing dividends. From the year 2010 to 2014, Pfizer had a compound annual growth rate of dividends of approximately 9%. While the growth rate has somewhat slowed down in the recent years, the company has continued to distribute a decent dividend yield, which as of the end of 2024 stood at approximately 4%. This is significantly higher than the average dividend yield of the S&P 500, making Pfizer a compelling choice for income-focused investors. Moreover, Pfizer has managed to maintain its dividend payments even in the face of adversities. For instance, during the financial crisis of 2008, while many companies were cutting back on their dividends, Pfizer stood its ground. It continued to reward its shareholders with dividends, demonstrating its resilience and commitment to its dividend policy. Another impressive aspect of Pfizer's dividend history is its payout ratio. The payout ratio is a key metric for dividend investors, as it indicates what fraction of the company's earnings are being returned to shareholders in the form of dividends. Pfizer's payout ratio has consistently been around 50%, striking a balance between reinvesting in the business for future growth and returning capital to shareholders. In recent years, Pfizer's dividend growth has been fueled by its successful product portfolio and strategic acquisitions. The company's blockbuster drugs, including the likes of Lipitor and Viagra, have generated substantial revenues, providing a solid base for its dividend payments. Furthermore, Pfizer's acquisition of Array Biopharma in 2019 has added promising oncology drugs to its portfolio, offering potential for future revenue and dividend growth. In conclusion, Pfizer's commitment to consistent dividend payouts, its ability to increase dividends over the years, and its resilience in the face of financial downturns make it a standout in the universe of high-yield dividend stocks. Its robust product portfolio and strategic moves also bode well for its future dividend growth. Pfizer has proven to be a reliable choice for income-focused investors. Its solid track record of dividends, combined with its future prospects, make it a compelling option to consider for those seeking both income and potential for capital appreciation. Next, we delve into Altria Group, a leading player in the tobacco industry. Altria Group, with the ticker symbol MO, has been a stalwart in the world of high-yield dividend stocks for many years. This company, which boasts a portfolio of notable brands such as Marlboro, Copenhagen, and Skoal, has consistently rewarded its shareholders with steady and attractive dividends. Let's take a little trip down memory lane. Picture this, it's the year 1989, and Altria Group, then known as Philip Morris Companies, kickstarts its journey of dividend payouts. In the 3 decades that have followed, Altria has not only sustained its dividends, but has increased them at a remarkable pace. Fast forward to 2014, Altria's steady dividend payouts had transformed into an unbroken chain of 50 consecutive quarterly increases. This impressive track record has earned Altria a spot in the coveted Dividend Aristocrats list, an elite group of S&P 500 companies with a history of increasing their dividends for at least 25 consecutive years. But Altria's commitment to dividends doesn't stop there. In the last 5 years, the company has maintained a payout ratio above 80%. This indicates that Altria is returning a significant portion of its earnings back to shareholders in the form of dividends. And in the world of investing, that's a sign of a company that values its shareholders. It's also worth noting that Altria's dividends come with a high yield. At the close of 2024, the company boasted a dividend yield of well over 7%. In contrast, the average yield of the S&P 500 hovers around just 2%. This stark difference underlines Altria's attractiveness to income-focused investors. However, it's important to remember that past performance is not necessarily indicative of future results. The tobacco industry is facing headwinds, with declining smoking rates and increasing regulation. Despite these challenges, Altria has been diversifying its portfolio to include reduced-risk products and has been investing in the burgeoning cannabis industry. These strategic moves could potentially secure the company's dividend payments in the future. Before we wrap up our review of Altria, let's not forget about the power of dividend reinvestment. By reinvesting dividends, shareholders can purchase additional shares, which in turn generate more dividends. Over time, this compounding effect can lead to exponential growth in investment value. To sum it up, Altria Group's long-standing history of consistent dividend payouts, its high yield, and its strategic diversification efforts make it a compelling consideration for those seeking a resilient, high-yield dividend stock. Altria Group's commitment to dividends is clear, making it a strong candidate for any dividend-focused portfolio. Continuing our journey, we have British American Tobacco, another heavyweight in the tobacco industry. This multinational company, often known by its acronym BTI, has a rich history that spans over 100 years. And throughout this time, it has made a name for itself not just through its diverse portfolio of products, but also through its noteworthy commitment to rewarding its shareholders. BTI has a long-standing tradition of paying dividends that goes back decades. Let's take a closer look at this. Their dividends have been as consistent as a Swiss watch, ticking along without fail, year in and year out. This is a testament to the company's robust financial health and its commitment to sharing its success with those who've put their faith in it. In the past 20 years alone, BTI has not just maintained but also gradually increased its dividend payments. This is quite remarkable considering the various economic challenges that have been encountered in this period, including the global financial crisis of 2008 and the more recent COVID-19 pandemic. Despite these hurdles, BTI's commitment to its shareholders remained unshaken, underlining the company's resilience. This steady stream of dividends isn't just about the numbers, it's about the message it sends. It tells us that BTI values its shareholders and is dedicated to ensuring their investment yields returns. It communicates that the company is financially sound, with stable revenue and profits that allow for such regular payouts. And it speaks of a business model that is sustainable, capable of weathering economic storms while still delivering on its promises. Just think about it. The ability to consistently pay dividends and even increase them in the face of financial adversity is no small feat. It requires strategic planning, prudent management, and a keen understanding of the market. These are all qualities that BTI has demonstrated time and again, and they are part of the reason why it has remained a favorite among dividend investors. Of course, past performance is not a guarantee of future results, and every investor should do their due diligence before making any investment decisions. However, a track record like BTI's can provide a strong indication of a company's approach to dividends and its commitment to its shareholders. To sum it up, British American Tobacco has been a reliable payer of dividends, displaying a level of consistency that is commendable. Its dividend history paints a picture of stability and commitment, providing a sense of security for those who choose to invest in the company. So, if you're on the hunt for a high-yield dividend stock that has never cut its dividends, BTI is certainly a contender worth considering. It's a company that has proven its dedication to its shareholders, ensuring they reap the rewards of their investment year after year. British American Tobacco has consistently rewarded shareholders, demonstrating the value of steady dividends. Next, we shift gears to AT&T, a giant in the telecommunications sector. An industry titan, AT&T has made its mark in the telecom world and beyond, boasting a rich history of innovation, growth, and resilience. But what truly sets AT&T apart in the eyes of many investors is its impressive dividend history. A member of the exclusive club of dividend aristocrats, AT&T has not only consistently paid but also increased its dividends for over 3 decades. That's right, 30-plus years of steady growth, come rain or shine. This level of commitment to returning capital to shareholders is a testimony to AT&T's robust business model and financial strength. AT&T's dividend policy is a reflection of its confidence in its future. The company's management has time and again reiterated its commitment to a strong dividend, underscoring its belief in the company's long-term prospects. This unyielding commitment to dividends is backed by AT&T's strong cash flow generation, which has consistently outpaced its dividend payments, allowing the company to comfortably meet its dividend obligations. But what makes AT&T's dividend policy truly unique is its yield. In a world where low interest rates have made high-yielding investments hard to come by, AT&T stands out with its attractive dividend yield, which has often hovered around the 6% mark, far outpacing the average yield of the broader market. And yet, despite its high yield, AT&T's dividend is far from risky. The company's payout ratio, a key metric that measures the proportion of earnings paid out as dividends, has remained at a comfortable level, suggesting that the company's dividend is well covered by its earnings. Moreover, AT&T's dividend has proven to be resilient in the face of adversity. Through economic downturns, industry upheavals, and even global crises, AT&T's dividend has stood firm, offering a beacon of stability to income-focused investors. But AT&T's appeal goes beyond its dividend. The company is at the forefront of some of the most exciting developments in the telecom sector, including the rollout of 5G technology and the expansion of its media and entertainment offerings. These growth initiatives, coupled with its strong core business, bode well for AT&T's future prospects and its ability to continue rewarding shareholders with a generous dividend. In conclusion, AT&T's robust dividend history, high yield, and commitment to its dividend policy make it a compelling choice for income investors. Whether you're looking for a steady stream of income, a buffer against market volatility, or simply a solid performer to round out your portfolio, AT&T deserves a closer look. AT&T's robust dividend history makes it an attractive option for income investors. Its unwavering commitment to its shareholders, its financial strength, and its exciting growth prospects all combine to make AT&T a standout in the world of high-yield dividend stocks. And that's why it's one of our top picks for investors seeking consistent, reliable returns. Last but not least, we have Philip Morris, a major player in the tobacco industry. Philip Morris International, known for its iconic brands like Marlboro, has been a staple in the portfolios of income investors for many years. As one of the world's leading international tobacco companies, Philip Morris has a long-standing history of rewarding its shareholders with consistent and attractive dividends. Let's take a look at their dividend history. Philip Morris has an impressive track record of not only paying dividends but also regularly increasing them. Since its separation from Altria Group in 2008, Philip Morris has continuously paid quarterly dividends. This equates to over 40 uninterrupted quarters of dividends, a testament to the company's financial stability and commitment to its shareholders. But Philip Morris doesn't just pay dividends, it increases them too. The company has raised its dividend every year since 2008. demonstrating a steady growth pattern. Even during economic downturns, Philip Morris has managed to maintain its dividend growth, underscoring its resilience and robust business model. This commitment to dividends stems from Philip Morris's strong cash flow generation. The company's business model is centered around a portfolio of established brands, which enables it to generate substantial cash flows. This cash flow, in turn, allows Philip Morris to fund its dividend payments and increases, ensuring a steady income stream for its shareholders. It's also important to note that Philip Morris's dividend yield is quite attractive. As of the end of 2024, the company's dividend yield stood at around 5.3%. This is significantly higher than the average dividend yield of the S&P 500, which hovers around 2%. This high yield, combined with the company's track record of regular dividend increases, makes Philip Morris a standout among high-yield dividend stocks. But what makes Philip Morris particularly appealing to income investors is its commitment to sustainable dividends. The company's management has repeatedly stressed the importance of dividends in its capital allocation strategy. They have pledged to return a significant portion of their free cash flow to shareholders in the form of dividends, reinforcing their commitment to providing regular income to their shareholders. In conclusion, Philip Morris offers a compelling dividend story. With its consistent dividend payouts, regular increases, high yield, and commitment to sustainable dividends, it stands as a beacon for income investors. The company's robust business model and strong cash flow generation further underpin its ability to maintain its dividend payments even in challenging economic times. So, if you're an investor seeking regular income, Philip Morris's unwavering dedication to dividends makes it a compelling option. With its long-standing history of dividends and commitment to shareholder returns, Philip Morris truly embodies the essence of a high-yield dividend stock. It's certainly a stock that deserves consideration if you're looking to build a portfolio that can provide a steady stream of income. Philip Morris's unwavering dedication to dividends makes it a compelling option for any investor seeking regular income. We've explored 5 high-yield dividend stocks that have never cut their dividends. In the grand arena of investment, consistency is king. Today, we delved into the world of Pfizer, Altria Group, British American Tobacco, AT&T, and Philip Morris, 5 titans in their respective industries. Each of these companies, with their robust financial health and strong commitment to shareholders, have never cut their dividends, demonstrating their resilience even in the face of economic downturns. Pfizer, a beacon in the pharmaceutical industry, has continued to reward its investors with consistent dividends. Their commitment to research and innovation ensures they remain at the forefront of their sector, providing a solid foundation for their dividends. Altria Group, a powerhouse in the tobacco industry, has shown its strength and adaptability over the years. Despite the challenges, they've maintained a steady dividend payout, underscoring their commitment to shareholder value. British American Tobacco, another giant in the tobacco industry, has shown similar resilience. Their global presence and diverse product portfolio provide a stable footing for their unbroken dividend record. AT&T, a leader in the telecommunications industry, has consistently paid dividends despite the rapid changes in technology and consumer behavior. Their ability to adapt and innovate serves as a testament to their steadfast dividend policy. Lastly, Philip Morris, with its broad international reach and diversified product offering, has shown unwavering dedication to its shareholders through its consistent dividend payments. These companies underline the importance of consistent dividends in an investment strategy. A company's ability to maintain its dividends through thick and thin speaks volumes about its financial health and commitment to its shareholders. It provides a level of stability that is not only attractive but also essential in a well-diversified portfolio. As an investor, it's crucial to look beyond the immediate gains and consider the long-term benefits. The value of consistent dividends cannot be overstated. They provide a steady stream of income, making them a vital component of a successful investment strategy. If you found this video helpful, remember to subscribe, like, and share. Stay tuned for more insightful content on investing.